Good morning, traders, and a very happy Friday out there to everyone. Hope that y'all had a nice evening there. Certainly should be a very interesting way to finish off our week here today. We'll have our Friday, and as we know, it'll be the third Friday of the month there, so we'll also have our monthly expiration cycle there for the options to, just be aware of there in the background. So we might see a little extra volume out there today on that NYSE. But outside of that, we'll have the expiration cycle. Not too many large figures here at the 8:30 mark. We have certainly have had our fill of those earlier on in the week. In today's case, 8:30, we have building permits and housing starts out there for the U.S. So those are really the only morning figures there to be aware of. So we'll take those into account, and then really that's the only thing on the board there for today as far as the economic calendar is concerned. So with that said, we'll come over here and blow up our daily charts on these S&Ps here, since we know that we kept things nice and contained during yesterday's trading, since we obviously didn't take out the 2-day low nor the 2-day high. We did have ourselves a little bit of the 3-bar balance mode there on the close there for those E-minis. And we also had a fairly narrow range there, so we're also sporting that feeling of a narrow range there, as far as the past 7 days goes. So not too shabby. Narrow range coupled with our 3-bar balance mode. So overnight we are proceeding to work ourselves up. Currently we're actually working on testing here this 45, 41 in a quarter there, the high from Wednesday's trading, which looms out there. And then outside of that, if we jump back out to the daily charts, where we're starting to come back up towards is the upper end of this previous congestion zone. It's been a process. We came back above the lower end of it first, and now as we push up any further, I'm just kind of monitoring this 45, 56 area, simply because we had two bodies of the bars up in that vicinity there from the trading on the 14th as well as the 15th on the following day. So nice movement up, made a nice high, and then proceeded to form the outside down bar on the following day. So viewing that as like being a zone of interest in case we reach up any further there. On the S&Ps, outside of that, we've been keeping things, pretty well behaved. We're certainly well above the 5 SMA still on the daily charts. That comes in down there at 45.04 and a quarter. Fairly close to the previous day's low there. So for now, obviously continuing to maintain ourselves on the dailies, reaching back up into that previous range, more so of the upper end of it. Over here on our intraday data, hourlies or 120-minute chart, we've been holding the ground fairly well. So we held the big round number during yesterday's, during our movement there on the 120-minute yesterday. We traded down to 0175, so just a notch above the round figure. So as we come up, right, that's that same feeling of the Wednesday high, and then all I did is take that same 45.55 from the daily charts there, those two data points up there, and just plotted them over here on our 120-minute data. So if we do end up, reaching up any further, that's essentially what we'd be running into there as far as the ES goes. But outside of that, I gotta say, keeping things, fairly well maintained and, behaved as far as their progress goes. So we'll keep an eye, see if that tone, continues at all going into the morning session. And then we were also left with that same, balancing act in the SPY during the pit session as well. So we can keep an eye, see if we get any type of nice movement during the pit session hours to work with also. But that's where we stand there on the S&Ps. Over here with the DAX, though, the DAX still continuing its extended run to the upside here with the consecutive closes on one side. So all fine there with the DAX. Also, not giving up much ground, not really consolidating too much. We traded above the 15,684, a couple days ago. We traded there to the tick, and then we've been putting in, 2 good full days well above our previous visible spike high that we had in the DAX. So in the DAX, we're also reaching back up. I wouldn't say it's exactly the same as the S&Ps there, but back into a little bit of a previous congestion zone. So We do have a spike high. This wasn't quite front month at the time when we were trading up there, but that's going to be 16,153 up above there as far as the DAX goes. So we've carried the ball quite a ways here. No doubt about that. We saw that even yesterday on that intraday data, such as that 120 minute hasn't really been able to come back down and touch that EMA as of yet. So just letting us know, good persistency of trends still taking place on the dailies. And what we'll do here just for the morning session is leave up this nice 15-minute display since we're forming this nice 15-minute pullback. In the early morning session here, what we'd want to note is, in case we got any type of failure test, this 15,956 would be a bit of a caution zone. And then outside of that, of course, you just have your full retest up from the overnight session. But we'll leave that there in the DAX so we can keep a watch on that in the morning session there. But not too bad of a tone there. Clearly on the daily chart, still really doing a fairly good job of keeping things well maintained. Then moving on along, we have that of the euro currency as well. EC has been doing some nice consolidation over the past 2 days, digesting the large impulse bar that we had to the upside perfectly fine. We've been putting in some good work. 5 SMA, of course, continues to rise during all this, so we did test that overnight. We had a little slip down there. Outside of that, here we are on the 120-minute display, really just keeping things nicely maintained. Like I said, we do have our little slip down that we had from the overnight, so we'd kind of be viewing that as like a little bit of a cautious area there if we slip back down beneath that, simply because we have all that structural work that still looms down below. But truly, for now, we're kind of doing like positive consolidation, right? Good large markup phase, slow line correcting all the way back down below zero, and just kind of filling out some range, doing some back and forth there. So we'll keep a watch there on the EC. You do have 1.09. It's a little bit of a round number up there above, but we see that we had some play around that yesterday, and we're pretty quick to come back off of that. So we'll keep an eye there on the EC, but that overnight low there certainly would be a bit of a cautious area in case the EC loosened up at all. But for now, they're keeping themselves fairly well maintained there. So all fine with that. That's the that of the euro currency. And then we have the gold here. The GC will blow up here just a notch here, include a couple more data points. As far as where we're coming back up into the gold, very impressive there with its movement yesterday, and coupled with the fact that they got some follow through overnight, so good extension here. A little shy on getting fully up there to the round number of 2,000, but that would be a little level to bear in mind there as well. But basically coming back up to the starting point where we had formed that original 3-bar balance mode after having that kind of extended run going to the upside, so not bad as far as the dailies. What's kind of neat here is on the intraday charts. If we blow this up just a notch and scale it proportionally, I'm viewing this zone as being fairly interesting because we had these two tests here. This is right below that 2000 figure, this 1997 here, since we do have 2 data points there. So as we're coming up in the gold, clearly we haven't reached all the way up there as of yet, but if we did, that would certainly be a zone perhaps to pause on the first attempt up. And I wouldn't say it's exactly the same as the euro currency, but in case we had any adverse reaction in the gold, where the line of thinking would start to shift, or be a little bit more of a cause for concern, would be if we came back below and started to trade beneath 1983, 0.6, since we also have, of course, that very large impulse bar up that we had. And doesn't mean that we ever have to, 100% go down there and assault it immediately. Same thing with the euro currency. But the point being is it's nice to have these zones marked off ahead of time so it doesn't catch us off guard if we do see some better pickup in steam. So for now, we can't fault them. They're really doing a good job of holding and maintaining. Likewise, EC and the gold kind of together there. But as we come up here, just, back inside this very large previous range. So we got the round number of 2,000 up above, 1997.7 to be exact there. And no real signs of sell divergences or loss of momentum, just kind of coming up here in a rather, orderly format there. So that's there with our GC, and then we have the crude, the real showstopper there yesterday, right? So with the crude, obviously we know we had superb, range expansion down yesterday. Overnight we've been seeing some counter-reactive lift, not by too much there, but easily can view this as being a spot of interest. The 74.92, the low that we breached from, of course, will be a nice significant point of interest for us. So we'll have that to consider there. We're trading right inside of yesterday's range currently, but if we do come up, that's going to be certainly a hurdle there for us. So 74.92 basis that January crude there. As we come down to the intraday, the 120-minute chart shows that same feeling of damage that was done from yesterday's trading. So to some degree we might be filling in some of the blanks here, but that 74.92 from the previous cycle low would be a nice point of interest. In other words, if we come up any further, fill in any more of the blanks, that's where we would be coming back up towards. So really like viewing that as being a nice zone of interest there for the crude. And how we'll handle it, we'll see it at the time. Like we said, they did have some good selling pressure yesterday, so all we're doing is some repair job after getting beaten up a little bit. So filling in a couple of the blanks, but clearly not up there yet to the 74.92. So that'll be a nice zone there for us. We'll even hit it with the little colored line there just to kind of denote its importance there. So that's there with the crude. Still, what's interesting is that we haven't traded below that previous day's low, which is not too untypical. Usually after these nice range expansion bars, we oftentimes do try and attempt to trade to that previous day's low. So we kind of just went sideways there as opposed to going much further down. So that's what we're left with, filling in a couple of these of the blanks there with the crude coming up. 120-minute moving average is at 74.50, but really I think that 74.92 and 75 even are going to be a little bit more substantial there for that at the of that CL there. And then last but certainly not the least is are the bonds here, the 30s. Interesting. Yesterday, I didn't really have necessarily like superb movement. We did have the inside range bar form for those 30 years, so we do have some breakout mode. We talked about this yesterday. This 115.12, 1, 2, 3, 4, 5 tests. No real closes above that point, but you gotta, see visually speaking how that zone has obviously served as a point of interest there for us. So several, I think 4 or 5 tests that we've had throughout that area. So overnight here we are doing some work holding above the previous day's highs. So we have that going for ourselves there. Between the 115.12 and the 115.23, we had a little boost up there in the overnight session. But what I do find also interesting, for those who keep a little bit of a closer tabs on them, is that of the yield charts. If you keep an eye on these yields, which move inverse against the bonds. So as these bonds traded up a little further, we had the yields pushed down. And just to be aware of, it does not mean we have to go in and fill it right away, but is the fact that we have some, small little gap areas that loom down below in the case of the yields opposite of the bonds. So we have this little area, 4.564 up to 4.6. So if we look at our little data point over here on the far right, we're trading right inside in between these two data points. This was from the trading on the 21st, or rather, let's see here. Yeah, the 22nd, 21st, 22nd, up to the 25th. So that was from our little weekend there. So opening right inside of this little previous general vicinity there in the case of the bond. So we'll see. We'll keep a watch on them there, see if they get any nice movement going off that 8 a.m. reading. But that's what kind of sticks out to me there for now, since they have a little bit of a gap and we're holding just a little bit above the previous day's high early on there in these bonds. But we'll see about that 115.12 there. That's been a seemingly a little bit of a hurdle there for them. So, with that said, we'll dial it on back here, let our morning building permits settle in. Once again, that's not going to be a very substantial data point, but we'll let that one run its course, see what we got lining up for ourselves thereafter, and we'll be on our merry way here for this Friday. I'm just going to leave up this 120-minute chart of the euro currency, or the gold. They're kind of interchangeable with each other, but we'll leave up the GC here for now, since we got that little 1999 previous 2 data points there that we can keep an eye on in our little caution zone. So, and then we got, of course, our S&Ps over there with the 41, and then 55 is the top of that previous congestion zone there. So all good and well, some nice zones, and as you can see, these 120-minute charts are kind of shaping up with a couple of these different features. So we'll settle it in and see what we got lining up for the day in front of us here.